What is going on, everybody? I'm going to be doing a video on how I enter the market and how I'm going to use a strategy to get funded through FTMO or any other prop firm. So, going into my strategy, I do have a break and retest strategy. So, looking for breaks of structure, coming back down for retracement, and seeing bullish engulfings, going onto a lower time frame, and then be able to enter off that small time frame. I have been back testing a couple strategies, one using the 5-minute time frame and also using the 15-minute. But mostly I enter off the 30-minute as that's kind of my base strategy. So I'm going to give some examples here on GJ. I always start on the highest time frame because I do believe in top-down analysis. So let me go to here. So I always look at the market, seeing if it's an uptrend or downtrend. How we know that is if there is higher highs being made and higher lows looking like this, because this indicates a uptrend. You have a higher high, higher low, higher high, higher low, and higher high. What I try to look for is seeing breaks of this structure here. Seeing this line here, this is the high that is made, comes down a little bit, breaks through. So technically this here is the break of structure. Coming up, coming back down, this is where I enter. So I try to look for this kind of setup. So on this higher low, I look for a pivotal moment with a bullish engulfing or a bearish engulfing, depending if you're looking for a buy or sell, and putting my stops below that support, because if it breaks under and closes, then it invalidates that trade. And then I'm going to do an example for a bearish move. You have lower lows, higher low, or higher or lower high, lower low, lower high, lower low. Once again, looking for this break of structure here in this area, coming back up, entering that sell from this moment here, trying to get the closest to the resistance or closest to their support as possible, so you can increase that risk to reward for a higher profit and also decreasing those losses. I'm going to give some real market examples here. If you guys have any questions, please let me know below in the comments. This video is actually inspired by one of the commenters from my last video asking how I enter or exit the market, and this is what that video is. Going down to a 4-hour time frame. This is the most of the time frame I'm looking at, looking for that break of structure here. So we can look at, let me find a good example. I don't want something that's choppy. Let me turn these off right now. Could use this situation right here. See how, may have changed to a line chart. It's not going to look exactly as textbook as I showed in that example, but we see here we do have a break of that structure, breaking these higher highs here. Coming back down just a little bit. If you look at lines on my chart, they're not actual price lines, they're actually zones. The only reason why I put lines so it doesn't really clutter my chart, so I can be able to analyze with all of that noise going on there. So we're looking for a bullish engulfing on the 4-hour time frame first. So we see here it comes up, comes down, retests that support. I'm looking for now a bullish engulfing, something that engulfs the bearish candles. So this one right here had a break. You put it right here, this line here. We go to a lower time frame. Let me go find that. It does look a little choppy, but we can see it does break above here. So we could enter technically, let me go down to a 15-minute time frame. Maybe it looks a little better. We do see a right here is an entry opportunity. Stops below. I always do 3 pips below. So it'd be 22, that'd be 25.7. And then right here, we're more in this zone here. So what I'm looking for, so we did have that break on the 4-hour time frame, which is I made this line here. We do see a retest on the lower time frame. Support is created in this zone here. See that? It doesn't break under. It does break under, but closes above. This is why you always want to have a stop loss set below the support, because sometimes this does happen. You know, what time is this? 11 p.m. The market's about to open, especially if this is GJ, which is London session. We might see pre-market liquidity, which is probably this, which is the sharks or the banks or just big investors. They try to stop out all the retail traders like us. But looking at this here, we do have a 1 to 2 risk reward. So how I analyze my trades beforehand, I always look for a 1 to 2 at minimum. So what that means, say if I risk 1% of my account, I'm looking to make 2%. And this can vary between if you have a $5,000 account, 10,000 or 100,000, that can mean a lot. So 1%, if on a $100,000 account, I'm risking $1,000. If I make 2%, that's 2,000. So I'm in profit. So now that gives me 2 trades of cushion to be able to lose. You know, you want to look for the higher risk rewards, so you get those 1 to 3s, 1 to 4s, so you have more time. If you go on either like a loss streak or, you know, things are just not playing out in your favor, you can become more profitable, kind of like a chart. You can have higher highs, higher highs in your account balance. And then you withdraw that money once you reach those higher highs, so you can continuously get those profits in. So as you can see here, this is a 1 to 2.07. So I'll make 2.07%. I always put my take profits at the resistance in a buy bias situation. It comes up during London session. This zone here, this blue zone, is London session opening. So I can see liquidity comes in, comes back down a little bit, and continues to make these higher highs. You know, you could take profits here if you want to do that, or you can trail your stops. I'll make a video on that later on how I trail my stops. But this video, I'm just going to retain to just entering and exiting the market. You know, I'm going to find an example here that you would get stopped out, just so transparency. Not all trades are going to go in your favor. So let's see if I can find that here. More recent. Like this here, I had an example I was setting up here. So we did have a rejection off this blue zone here, which is my H4 resistance, because we do have a lower low, lower high, lower low, testing that last high. And we did have a bearish engulfing on here. So let me go down to a lower time frame. Once that happens, I was looking at an example here off of the 5-minute time frame here. We did have price come down. If you see here on the lower time frame, we do have a break of structure, a retest, and then I was looking for a potential down to these lows here. It didn't play out. So let's see why. So after the 4-hour closed, I looked at it and, you know, looked solid from that resistance. Going down to a 5-minute time frame, we did have a bearish engulfing right here. This was my entry point. Stops above 3 pips. That would be 14.4. It immediately hit my stop loss. Looking at it again, we had a bearish engulfing here. They had a two candle variation here, and, you know, didn't work out, as you can see. You know, sometimes it happens, sometimes it's not. So that's why you have a win rate. Looking at this, you know, at this loss, you have to be okay with taking those losses, because you have to be confident behind entering the market and exiting. That's why we try to go for higher risk reward. So if you take those losses, you're just eating at your profits and not actually your account balance that you invested into. If you guys have any questions on how I enter in a more intricate level and what I really look for, I can make a video on that. I just want to go over this as an overview on how I enter the market so you guys can get more insight when I break down those trades. Yeah, so if you guys have any questions, please let me know down below. I hope you guys like this video, and other than that, hope you guys have a great week and stay blue.